So you got a deal under contract. Congratulations. Now what? The clock is ticking. We either now have 30 days or 60 days to do due diligence. And there are 5 types of due diligence, but the focus of this video will be on just financial due diligence and everything you need to know about it to successfully acquire a business. Let's get to it. Hey everybody, welcome to my channel. I am your host, Leo Landaverde, business broker and commercial lender, helping you buy and scale a profitable business. If you're a small business owner looking to increase your wealth by buying a profitable business, or a W-2 employee sick and tired of the rat race and wanting out, this is your channel. Please don't forget to subscribe to it and hit the bell. We have content come out every Thursday. Back in November 2022, I did a video, an extensive 25-minute video on due diligence. It was a guided video. There was I was going through a PowerPoint. If you haven't watched that video, please, I suggest you watch it because this video is an expansion of that original video. So you need to watch both of them. The links will be up here and down below as well. So what I'm gonna do is I'm gonna expand a little more on the latest that has happened since 2022 on due diligence. And just to start out with, there are 5 types of due diligence that you need to know about. If you're gonna buy a business, you need to be aware of 5 types of due diligence that you're gonna have to do as an acquirer. 1, financial. 2, legal. 3, operational. 4, market due diligence. Yep, there's such thing as market due diligence. And number 5, cultural or staff. Now the cultural fit, and it could be rather complex, and each one of them is a subject of his own video, but today we're talking about financial due diligence. So what I'm gonna do is I'm gonna give you a list of documents in descending order of critical importance that you need to have when you're gonna hire an expert, somebody who's gonna do due diligence for your business. I strongly suggest that you as the buyer do not do your own due diligence. Unless you are an accountant of subject matter expert. If you are actually coming in as an industry expert and buying a similar business in the same industry, chances are that if you have a good accountant on your team, and by the way, you own a business, you may get away with not having a due diligence third-party person. But if you don't, you absolutely need to have a CPA or an enrolled agent as part of your deal team. So, first and foremost, 3 years of business tax returns. More important than the numbers, I'm looking for percentages, year over year, changes, up or down, why, changes in the cost of goods, changes in the gross profit, changes in the operating expense, changes in the rent, and variance of each year over year. Trending and ratio analysis. There are ways, we spend quite a bit of time inside of our pay group, what we call Business Acquisition Mastery, really diving into how to really read and interpret tax returns, whether they're subchapter A corporations, C corporations, or partnerships. Occasionally, you're going to do Schedule Cs, which I highly don't recommend that you take on Schedule C, but sometimes there are Schedule Cs out there, which is sole proprietorships. So 3 years of tax returns, you need to have all of the pages of the federal. We don't care about the taxes for the state. If there are state taxes to be paid, we care only about the federal. We want every schedule, especially the depreciation schedule, because you're buying an asset. You want to make sure what has been depreciated inside of the business and the balance sheet. 2, customer and vendor concentrations and SWOT analysis of them all. The strengths, weaknesses, opportunities, and threats of both the customers and the vendors. You want to have the top 10 customers by revenue and the revenue as a percentage of overall revenue. If you're stuck and trying to figure out how to buy a business, don't be stuck any longer. Let's connect. I'm sure you have questions. I have answers. What is the best price to pay? When you do due diligence? When do you get the lenders involved? Etc., etc. We need to connect. I'm offering you a free complimentary call. Just follow the prompts in this video. Click on the link below and let's connect because I can offer you help at a fraction of the price. Reach out to me. With auditors' reports as well as audit letters, replies for the last 3 years. Current year interim financial statements with comparable statements the prior year, balance sheet, and income statement. Now, I want to see the tax returns first and foremost, and that's the validation of the data that you're going to pass on to the lender pre-letter of intent. But you also want to see the interim financial statements for the last 3 years corresponding with the tax returns. For instance, if you are buying a business in 2024, I would want you to see the first quarter of 2024 P&L and balance sheet compared to the first quarter 2023 P&L and balance sheet in accrual and in cash, preceded by years 21, 22, and 23 of tax returns. The preceding trailing 3 years worth of every page of the federal returns, tax returns. That gives us a baseline, because if we don't do a good job with that, and sometimes it's going to be impossible, which reason why we do an LOI, we don't do an asset purchase agreement from day one. We need to have a way out, and the due diligence is a way out of the deal. The company's credit report, if available. You want to know about the paydex. You want to know any projections, capital budgets, and strategic plans that the company has. Anything that is forward-looking, future-thinking, you want to have when you're doing due diligence. You want to have a schedule of all indebtedness and contingent liabilities, a schedule of inventory, and with valuation reports. Sometimes, you want to see all of the inventory and the valuations as quarter over quarter, year over year, depending on the volatility of the business, especially businesses that have inventory and there are COGS. You want to have a schedule of accounts receivable, AR aging summary, schedule of accounts payable, AP aging summary, corresponding with each fiscal year end, a description of depreciation and amortization methods and changes in accounting methods over the last 5 years. There's actually a questionnaire that we share inside of our group as to what to do and what to give the CPA and to doing due diligence. Analysis of fixed and variable expenses, an analysis of gross margins with explanation of year-over-year variances. See what I'm getting at? More important than the numbers are the percentages associated with the numbers. You also want to see the company's general ledger, trial balance for the last 3 fiscal years. As I said before, asset and the list and depreciation schedule, and a description of the company's internal control procedures. Now, this becomes evident and obvious when you're doing an audit. We are not doing an audit, neither is your due diligence person doing an audit. But you want to get as close as you can without paying an audit price to do an audit. So those are the kinds of things that I would tell you to get. Their list is more exhaustive and there's a lot more to compare. But here's the thing. Now that I gave you the list, let me tell you exactly what we look for. We need to make sure the whole purpose of due diligence is to either validate or invalidate the information given to us in the SIM, the confidential information memorandum. That's all we're doing. Are we either validating or invalidating? It's either pass or fail. Either the diligence is going to pass or it's going to fail. If it fails, you don't want to buy that business. And if it passes, it's going to have areas of failure that you need to address with your due diligence person as to, should you be concerned, does it matter, does it not matter? The due diligence person's job is to point out good, bad, and ugly. Red for don't pass, green for passing, and yellow for proceed with caution. So, and this is just one aspect for you. You are ultimately the one who's going to be driving. You, the buyer, are going to be responsible for the operational part, the cultural part, and the market fit. And you're going to have the attorney do the legal piece. I would probably do other videos when I talk a little bit about what goes into the legal, the operational, the market, and the cultural in later videos. But hopefully that is helpful to you guys. I know that you guys ask me a lot all the time. For about 10 years, I've done due diligence. That's how I got started in mergers and acquisitions, by doing due diligence, whether buy side or sell side. I've seen plenty of trial balances in my professional life. And if you want to work with me, I would love to tell you everything you need to know about buying a business. Thank you so much for watching this video. For a limited time, I'm giving away my Deal Analyzer 3.0, which is the latest version of the tool that I'm giving away thousands of times to viewers just like you. Thank you for subscribing to my channel. Basically, everything that I talk about in some of my videos is there. 80% of the tools that I talk about inside my pay program are there. But this is a great way for you to get 80% of everything for free. Also, my buyer's business checklist, it's also yours to have. Thank you so much for subscribing to my channel. Please download them at the links below.